Let's just start with a painful truth, okay? Most traders don't fail because they don't know enough. They fail after they think they've learned everything. It's this incredibly frustrating paradox, and today we're going to break down exactly why it happens and, more importantly, how to actually fix it.
I mean, you've put in the hours, right? You've studied every single chart pattern, you've watched countless tutorials, you've learned all the lingo. You feel like you should be winning, but when you're in the live market, it still just feels like a complete coin toss. If that sounds familiar, trust me, you are not alone.
And this right here is the heart of the problem. You know what a break of structure is. You can spot liquidity grabs from a mile away. You've tried every indicator under the sun. You have probably consumed enough content to teach a course on this stuff. And yet, the profits just aren't there. Why is that?
Well, here's the real issue. It was never about information. It's always been about integration. See, getting more knowledge is the easy part. It feels really productive, doesn't it? But actually applying that knowledge under pressure in a consistent way, that's the hard part. You've been accumulating concepts when you should have been building a concrete decision model.
This leads to this bizarre situation where the more you learn, the more it feels like you're losing. It sounds totally backward, I know, but let's dive into the psychology of why this happens.
And this is the vicious cycle it creates. You learn a new concept, right? Say, order blocks. So you add it to your analysis. Now you need a break of structure, a return to an order block, and maybe an RSI divergence. The more confirmations you add, the more you hesitate, just waiting for that perfect, flawless setup that, let's be honest, almost never comes. You miss good trades, you get frustrated, and then you think, I just don't know enough. So you go back to learning more, and the loop just gets tighter.
And this is where it all just falls apart. When you're in replay mode on a Saturday afternoon, every setup is crystal clear. Of course you should have bought there. It's so obvious. But in the live market, with your real money on the line, that uncertainty creates this massive psychological pressure. And suddenly your well-intentioned list of confirmations just becomes a source of doubt. Your emotional brain takes over, and your execution becomes totally random and inconsistent.
This quote really just nails it. Without even realizing it, your goal completely shifts. Instead of focusing on a profitable process over the long haul, your ego gets involved. You become obsessed with predicting the next move correctly, needing that instant hit of gratification from being right.
So, if knowing more isn't the answer, what is? Let's take a look at how the pros approach the market. Their edge might actually surprise you.
Take a good look at this number, 43%. What do you think this is? The failure rate of new traders? Nope, it's something way more shocking than that.
This is the win rate of managers at some of the best hedge funds in the world. They are wrong more often than they are right. I want you to let that sink in for a second. Their success has absolutely nothing to do with being right on every single trade. So, if they can be insanely profitable while being wrong half the time, what are they focusing on?
George Soros just laid it out perfectly. It's not about how often you win, it's about the size of your wins. A profitable system isn't about having an 80% win rate. It's about making sure your winning trades are significantly larger than your losing trades, period.
This slide shows the two paths perfectly. The ego-driven trader, right? They take all these small little profits to feel right again and again. But then one huge, undisciplined loss just wipes out everything, and then some. The process-driven trader? They accept small, controlled losses. It's just the cost of doing business. They know they're just waiting for that one big win that follows their system, which pays for all the small losses and puts them way into profit.
Okay, so how do we make that shift? How do you go from being a collector of random information to a disciplined executor of a real process?
The missing piece is repeatable model. And look at the key words here. Fixed sequence. Profitable traders don't know more than you do. They've just defined their edge and created a non-negotiable set of rules for exactly when to act. This structure, this is what lets them execute without emotion or hesitation.
And a model doesn't have to be some kind of complex algorithm. Just look at this example from Trades by Sai. It's so simple, it's beautiful. Number 1, wait for an indication, like a break of structure. Number 2, wait for the correction, the pullback. Number 3, look for a sign on a lower time frame that the pullback is done. And then you execute. That's it. No complicated indicators, no conflicting signals, just a clear, repeatable sequence.
So this is the big shift. You have to change the question you're asking yourself. Stop searching for the next holy grail strategy. Instead, take the knowledge you already have and start defining it. Ask yourself, based on what I know, what is the exact sequence of events that has to happen for me to risk my capital?
And that brings us to our final and honestly our most important idea. The goal was never to become a walking encyclopedia of trading knowledge. Let's be crystal clear about this. If you have put in the work and you are still not getting results, the problem isn't what you know. It's how you've organized what you know. You don't have a knowledge problem. You have a structure problem.
You know, true trading confidence doesn't come from believing you can't lose the next trade. It comes from having a system that you know has an edge, trusting that system completely, accepting that losses are just a part of the game, and knowing you can execute your plan flawlessly, over and over again. It's confidence in your process, not in the outcome of any one trade.
And if there is just one thing you take away from all this, please let it be this. The market does not care how many books you've read. It doesn't care how many patterns you've memorized. It only rewards clarity of thought and disciplined execution. Simplicity and repetition will beat complexity and hesitation every single time.
So I'll leave you with this question. Are you going to keep going on that hamster wheel, collecting more and more information, just hoping the next concept is the one that's going to make it all click? Or are you ready to stop, take what you already know, and build the simple, structured model that will give you the clarity you actually need? The choice is yours.